Good morning, nonprofit financial leaders. I wanted to talk a little bit more about the closing checklist, walk through kind of the sections, how to use it, how you can modify it to fit your nonprofit or your needs better. Share a little bit of that with you, and hopefully that will help you when you either download the free PDF or download the Excel template to use it to your advantage rather than, getting it and not ever taking advantage of it. So I'm going to share my screen here. And we'll get into it. So the way this checklist works is it's broken out into different sections of your accounting. And so at the very top, it's kind of just general stuff, preparations and reminders, anything that we want to do towards the end of the month or maybe at the beginning of the next month to get everybody ready, to notify them that we want to meet, to ask people to, prepare schedules or things like that, kind of just a standard, hey, remember, next week is when we're going to do such and such for the month end close. Please prepare our schedule by then. And so it's broken down into sections. We're going to start with the balance sheet or the statement of financial position, as it's called in a nonprofit. And so really what this breaks down is everything you own, your assets, everything you owe, your liabilities, and your net assets, which is kind of the difference between the two. You hear probably a lot of people talking about net worth, right? Of an individual. Net assets is similar to that. And so, as I mentioned, the top is just your reminders. You could put whatever is helpful here. I left a few spaces blank. And so we have our category to the left. If there's an applicable GL account, so what account does this apply to? You can put it in here. If not, especially up top, that's no problem. The description of the task, who's responsible to complete the task, the status of the task. And so I can add to this, or you can add to this. It's in one of the hidden tabs down here. If you're familiar with Excel, it's just a list. And I didn't add any extra space, but you can modify the formula. So has it been started? Is it in process? Does the preparer have questions? Is it complete, or is it not applicable either this month or not at all to your organization? You could hide it or delete it also. What is the due date? What is the date it's been completed? And any comments. If you need something to follow up on next month or things like that, you could throw them in here. So the very first section below that is our cash. And of course, every month we need to be reconciling every single bank account that we have for our organization. And so that's really important. Another thing that I recommend is that somebody independent of the accounting team takes a look at that bank statement first and just scan through it. What looks reasonable, right? Taking a look at the canceled checks in there. Is that their signature? Does that look like somebody else? Do they recognize all of the vendors? And so that's a really good chance to take a step back, reconcile your cash, make sure you've recorded everything, get some approval, have some extra eyes, and go from there. So I included a few different possible checking accounts, payroll accounts, savings accounts, but pretty much the same process for all of them. And then we get into our AR and accounts receivable. This is all the money that is owed to your organization for any reason. It's a little bit more complicated and specific to your organization. So it will be important that you read through this and decide how it applies to you and maybe tweak it a little bit, because maybe you don't have grants, or maybe you need more for each program. Maybe you need to meet with multiple program directors. So there really is an opportunity to just go ahead, insert a line here. You can copy down what's below and then go ahead and delete the content that you don't want and input the content that you do want. Super easy, right? So it's in the same format. Some of the things, I don't know if all of you are familiar with an accounts receivable aging and AR aging. And so what an aging does is it tells us who owes us money and for how long they have owed us money. And so the aging kind of puts it into buckets of less than 30 days, 30 to 60, 60 to 90, 90 plus. So what is the customer? And how much do they owe us? and for how long have they owed us. And the same customer might owe us, from 30 days ago and 90 days ago. And so it really gives you an opportunity to check up on things before they get too old. Maybe you'll want to pull everything over 60 days and follow up, or maybe your policy is everything over 30 days, or maybe you work with the government and they're a little bit slower and it's everything over 90 days. So like I said, very custom to you, very custom to your organization, but really gives you a chance to step back, evaluate whether you think they can pay, evaluate whether somebody made a mistake and double entered an invoice and, oh, we already got that money, right? Take a step back, look at what's in there, think about it, talk to your grant coordinators, talk to your fundraising group, talk to the executive director, because they all get information all month long about what's owed to you, who's going to donate to you, things like that. So this is the most important area that you're really going to want to coordinate with multiple people across the organization. I included prepaid expenses in here. A lot of my nonprofits, especially, I don't know, under the $6 million range, might not do this throughout the year. And prepaids are expenses that you pay now, but they're for a future date, a future time. So maybe I'm paying for insurance for next month, or maybe I'm paying for insurance for next year, or maybe I have a building maintenance contract and it spans a whole year. We like to spread that out a little bit. So we put the amount in prepaid expenses, and as that time comes, as the event happens, we take it into expense. So not all of you will have that. That's okay. You might adjust that only once a year. You can delete the section, disregard, whatever works for you. Fixed assets. So our fixed assets are all of the major things that we own as a nonprofit. So our building, our computers, our furniture and fixtures, our equipment, everything like that. Most nonprofits, or all nonprofits, should have a capitalization threshold in a policy to say everything over $2,500, we're going to put in this bucket. And so when you look at your fixed assets at the end of the month, you'll want to talk to maybe your maintenance coordinator or somebody else to see what you've purchased. And you might want to flip through your repairs and maintenance account and say, did we miss anything? Did we misclassify anything? And if there's anything over that $2,500 threshold that's not a true repair, maybe you want to get it and move it up there. So this is just an opportunity to, again, take a step back, think about what your organization purchased, and then take the opportunity to make sure it's in the right place, and then consider depreciating it at whatever interval you do that. I have some other things here, the other assets. I won't go into those in great detail. That's really kind of the catch-all bucket for everything else. There could be other current assets and other assets. So depending on how detailed your accounting is throughout the year or what size organization you are, that might be where that's applicable. Your accounts payable, similar to your AR aging, we have an AP aging, and that's everything our organization owes to other people, to our vendors mostly, right? And so it does the same thing where it takes everything that you owe and it puts it into buckets. And so, what are the most recent invoices in the last 30 days? What are the 30 to 60 day? What are the 90 day plus, right? And so if there's anything getting that old, are we struggling to pay? Is there a problem with that specific invoice? Or have we just missed it? And so it's a good opportunity for you to look at who you owe and get them paid or resolve any issues regularly before, it's the end of the year and you're going through your audit and they're asking those questions, because I promise you they will ask them. And so that's that. Accrued expenses. Accrued expenses, the best way that I think to explain it is it's still money you owe to other people, but often it's not the kind of expense that comes in with an invoice. It might be some legal settlement you're going through, and it's going to require some judgment. It might be payroll. So we had our employees work, December 25th through December 31st, but we didn't actually pay them until January. So we're going to account for that expense in this year. and through a payroll accrual. It might be their related benefits. It might be all sorts of things. So really any of the money you owe that doesn't come through the standard invoice, or you don't have an invoice yet, you can put in that bucket. So again, that's another time when you might need to talk to your lawyers if you're in the middle of a lawsuit, or talk to the people who are running the programs to say, you know, what hasn't come in yet? What are you still waiting on? What kind of bills are you waiting on from the December Christmas concert, or things like that? Long-term debt, right of use liabilities, finance leases. So I'm sure that most of my nonprofits are not recording their right of use liabilities and finance leases on the smaller scale, right? Like on those are smaller nonprofits. We're going to lean on our CPAs for that. But as far as long-term debt, do you have any loans out there? And when you record those payments, it's really important that you're breaking out the principal and the interest piece, because the principal is going to reduce your loan and the interest is going to go to your expense. So you want to make sure when you're recording those that you're splitting them into those two categories. And so one of the ways you can double check yourself is to pull your loan statement and say, all right, what's in my accounting? And what does my statement say? And kind of reconciling those two. One thing I'm just thinking I don't have in here is your credit cards. So I will add a spot in your up here, probably under AP, to say, do you have your credit card bills in? Because that's a big one that we miss. A lot of times we'll have transactions all month long. And of course, we're not paying it till next month, but we want to make sure that we get those credit cards in. Our net assets. So this is going to roll into our next topic. The blog is already out. Our net assets. So as we all know, our donors can give money for a specific purpose, and it is legally required that we uphold that purpose if we accept those donations. And so when you get restricted donations, net assets need to be earmarked and say, okay, you know, here's how much of our net assets are unrestricted. Here's how much have a donor restriction. That's called with donor restriction. They can be restricted for a purpose or for a particular chunk of time, or they could be restricted for forever. And that's where we get into endowments, right? Where somebody says, I'm going to give you $1 million. Awesome. And you can spend, you know, 5% of the earnings every year. And the rest I want you to put back in, and we'll save that for a future day. Revenue, we talked up above a little bit with our AR, but sometimes there are other buckets of revenue that you might not have caught and you might want to consider here. So I just have a spot for it. As far as expenses go, you really want to run your expenses by program. QuickBooks does a really great job of that. If you have that, if you're using the class function, take a look at it, compare your expenses against the budget, bring in your program directors, bring in all of the nonprofit leaders who are in charge of their own budget. See what they think. Does this look reasonable to them? What do they think is missing? If you didn't catch something in the up above sections, you're probably going to catch it here, because somebody's going to look at that and say, oh, wait. And then you'll talk about it and decide what needs to happen from there. And the final section I have here is the board reporting. And so once you've gone through all of this, you're ready to run your board reports. And you've thought about everything up above, and then you run your board reports. You're going to give it one last look, right? With all of those other things in mind. Did I miss anything? Did I miscode anything? Did I correct anything? And then go ahead, share that report with your executive director if that's the process. And then they will send that up to the finance committee, and you will be ready for their questions because you've talked to everybody. You've met with the program directors, you've met with the fundraising directors, you've met with the executive director. And so you really have a solid grasp of what happened in the organization this month. And you're going to be ready for those questions when they come of why is this and why is this? Because you have dissected this, stepped back, thought about it, and you are so ready to go. So check it out. Let me know what you think. I can help walk you through it in a consulting engagement. We can customize it together. But I think this is a really good blueprint to get you started so that when you're stepping up to the plate, you have prepared extensively. And just so you know, I mean, this might take a while the first couple times, right? It might take, a day the first couple months that you do this, but you're going to get more efficient at this. And a lot of things will just become ingrained, and maybe meetings will turn into like emails with sharing documents, and you can just compare apples to apples. And it's going to become a lot less involved over time. But it's also going to make everybody you work with happier when they get to see how they are doing. How are they performing? How is their budget coming along? And they're going to get real-time information so that they can correct their course of action if needed, or maybe spend a little more to make sure they take advantage of a grant before it's too late, before it's all hindsight. So thanks for being here. Thanks for watching, and I'll talk to you soon.